Good morning and welcome to this BIA webinar. This is the first in a series where we're going to be introducing you to the different players in the investment community. This morning we're meeting the broker, who they are, what they do and how you can get the most out of them. Your microphones are muted, so you'll be able to put in questions for the panel to answer in the box on your screen. We're recording this session and we'll be posting on YouTube afterwards. So now over to you, Christine.
Thank you. Good morning. I'm Christine Soden. I have the pleasure of chairing this little panel, and I've had around 30 years of experience in senior finance roles in life sciences businesses, so a whole range of businesses from genetics through drug discovery to marketed drugs through medical devices and such. And a lot of those roles have been in public companies. I'm currently the finance director of a company called Acacia Pharma Group that just floated actually on the Brussels Euronext exchange, which is a different experience. Also a non-executive director of eTherapeutics and a couple of private companies as well. And now I'll go clockwise around the room, but you'll have to trust me that that's what I'm doing, because obviously you can't see, but let me introduce the rest of the panel, please, or let them introduce themselves.
So my name is Max Herman. I'm a sell-side analyst at Stifel, and as a Stifel analyst, my key role is to research pharma and biotech companies, write research reports on those, and communicate with investors about our ideas about the investment opportunities in the market for pharma and biotech companies. Again, a lot of the interactions we do are directly talking to investors as well as companies and relaying that back and forth, so communication between the two and interpretation in between. So we also work very closely with our investment banking colleagues, who you'll hear from today, as well as our sales and specialist sales team. So integral part of one of the cogs in the investment banking world.
Thanks, Max. Just very quickly, is it worth just clarifying the difference between buy side and sell side, because those are terms that do get bandied around a lot?
Yeah, sure. So as I introduced myself as a sell side analyst, so that therefore I am an analyst working for an investment bank, talking about opportunities for investors to potentially purchase shares in our covered companies. The buy side would therefore be the analysts and fund managers that we talk to, since they are the ones who would be effectively buying the shares in those companies.
Thank you.
Phil Walker, good morning. I'm a corporate financier. I'm managing director at a pan-European investment bank called Bryan Garnier. As a corporate financier, my primary role is providing advice to the corporate, which is probably in the title, somewhat of a giveaway, and acting as a conduit between the corporate and the management team and the other parties within the investment bank, so the research analysts and the sales and corporate broking.
Thank you.
Hi there, good morning. I'm David Cox. I'm the healthcare specialist salesperson at Panmure Gordon. My main role is to be the main point of contact from the sell side to the buy side, so I directly interact with the investors, and I promote the corporates that we act for, and also the research similar to that Max writes. My job is to get that out there and promote that among the investment community.
Thank you. Well, the first topic I just wanted to cover on was really at what time should you first approach a broker, and which part of the bank should you be talking to? And I perhaps have a view from each of you on that, if that's okay.
Right. So Max here. So as a sell-side analyst, we're very happy to meet companies and often go to conferences and different events where we might interact and listen, both from a competitive intelligence purpose, so to try and understand better the industry and how some of the companies we cover are positioned in that industry, but also to find new companies that may be of interest. But we would generally then link that into a corporate financier who would be involved with discussions about what that company may be interested in doing in future. But I'd say good to obviously approach long in advance of a plan to float a company, or when you plan to IPO, but not necessarily need to do that from day one.
Yeah, Phil here. I generally agree with what Max said, really. The point of contact can be anyone that you know and meet within the investment bank. If you're a private company, obviously there's no issues of inside information. So I think a company out there looking to get advice or start a conversation should feel free to contact whoever they have as the point man at that bank. Obviously, if you're a public company, you're looking to do a transaction slightly different because there are potential issues of inside information. And in that case, the corporate finance would be the principal point of contact. Me as a corporate financier, I am effectively permanently inside on clients and non-clients that are looking to do things. One thing I would sort of stress to any company who is looking, particularly a private company who's looking potentially to float or looking at other opportunities or alternatives, is to whoever your point man is, whatever your point of entry is, I'd try and get to know all the major sort of principals in the team, whether corporate finance, research, sales. One, so you can start building a relationship, but also two, to make sure that you're getting buy-in from all of the main parts of the bank, so you haven't just got buy-in from one part. So it's about building a relationship. If you're thinking of doing something, I would say speak to a bank as early as you can, even if you're not looking to do something imminently.
Thanks.
Hi, David here. Yes, I would agree with both those points again. It's never too early. It's always good just to have the relationship in place, even if you're not thinking of a particular transaction at that time. Sometimes it might be the broker that approaches you, and we have a view of the market and what the market's looking for, and you might be ripe in a broker's view for a transaction of some kind. With that in mind as well, keeping the relationships going. Individuals move around between companies, both in the pharmaceutical space and in brokers. So it's good to just know individuals within the sector, because you never know when something might happen. It's always good to keep the relationships warm.
Thank you. So the next topic really is just trying to get a bit of an overview of the kind of services that a broker or a bank can offer. And I don't know if David, you might want to sort of give a quick view of what you think the key points are if you were talking to a company, if you were saying, come to us, why would they come to you?
Well, I mean, the main thing is really on access to capital. So that's the whole reason why you'd use a broker in the first place. So, it's a good idea as a private company to go on ad hoc roadshows, get introduced to investors. That's one obvious service, just to get you on their radar. Equally, in terms of what a broker can offer, it's research. So the research that analysts write on you. With MiFID II now, the whole research landscape has changed, and different brokers will have access to different buy-side investors, i.e. they'll have different groups of investors that pay for access to their research. So that's another thing that should be very seriously taken into account, because obviously you want access to investors post-IPO. So during an IPO, there's no restriction on which investors you can talk to, but following an IPO, once you're a public company, there are restrictions in place, and investors need to be signed up from a MiFID II perspective to access research from brokers.
Yeah, thank you. I think we can perhaps talk that subject through a little bit more in detail later. But one of the, Phil, there are different banks go to different levels of services in terms of how much they focus on corporate finance or how important broking, market making is to them. Do most of banks, in your view, try and take as full a view as possible, or do some focus in one particular area?
I think probably each bank will have their own slight sort of slightly different sort of focus areas that they're good at or prefer or feel that they're particularly strong in. I think from my perspective, looking at and mindful in this sector, and David hit the nail on the head, that invariably companies are looking to access capital. So principally it's about accessing capital. There might be some sort of peripheral's a bit flippant, but peripheral services around that. There might be some financial advice, there might be some M&A, companies may be looking to sort of bulk up, in-license, do M&A in order to get to a critical mass, in order to access the capital. So I think there are a number of services that a bank and broker can offer in the run-up to accessing capital in terms of that advisory and M&A in licensing assistance. When coming to market, I think absolutely it's about getting the capital, but then it's about servicing the investors and the corporate, from my perspective, in the aftermarket. And that obviously involves the market making side, but research is clearly a critical point of that.
Sure. And different banks have a different view, have different balance sheets of their own. So some banks are prepared to help a transaction through by actually holding some shares on their own balance sheet. Is that something that companies should think about in terms of who they work with? So the strength of the bank and the broker itself?
I would have thought that's right at the end of the sort of spectrum of the services that you would look for. I think primarily if you're looking to appoint a broker or an advisor, you want to see what they can do in terms of introducing you to investors. I think if the bank is investing in you, then I would query why. Is that making up a shortfall because they can't raise the money? So I think in my mind, a corporate would be much better looking at and getting confident that a bank can do the broking and the introducing and the raising the capital as an intermediary rather than taking a
sure. Position. And Max, I mean, a number of the banks, brokers, certainly the bigger ones, run their own conferences, etc. Is that something that it's reasonable to expect from a mid-sized bank, or is it really the domain of the bigger banks? And how do companies try and get themselves seen there?
So I think lots of banks arrange conferences and seminars, and if they're not, as you say, perhaps of the scale that they do organise a conference, then potentially they will run seminars or institutional lunches and different events. So I think, broadly speaking, most investment banks and brokers will arrange some sort of platform to have access. Stifel, we have a healthcare conference that we run annually in New York in November. So we're I would say a mid-tier bank. And we certainly have a conference. And in the past, I've run conferences at other institutions, and also we've run Stifel seminars for more focused on the UK market and the companies that we cover. So I think it's a broad brush. It's very important, I think, in the US corporate conferences. So investors particularly like to and expect to see companies that they are interested in investing on a very regular basis. So it's a routine circuit almost on a monthly basis where one or two different banks will host conferences each month, and people move from one to the other, and investors move from one to the other.
Yeah. I mean, just from experience, sometimes you go around these and spend a lot of money and you see the same people every time you go. But I think certainly with American investors, you can't underestimate how many times you have to meet them before they're kind of hooked and are prepared to take you seriously. So they're certainly, it's always worthwhile trying to go to these investor conferences, I believe, just to, I mean, as much as anything, see how other companies are presenting themselves, see how they're doing, and try and pick the best from what you see there. But
I mean, I think that's the other interesting thing is you can have go to a meeting when you're trying to maybe IPO or trying to raise money for a follow-on, where you have lots of different meetings with investors. Some you think went really well and the investors don't buy, and some you think went really badly and the investor then takes a significant stake. So you have to turn over a lot of or kiss a lot of frogs to find your investor.
Sure. Okay, there's just a couple of questions come in that I think we can wrap into this next subject. And first one, is there a minimum amount I should look to raise before contacting a broker? And the second one, do you have to be thinking about listing shares on the stock exchange to even approach a broker? And going from that, I think then the answer to both of those is probably no, but let's kind of just wrap it into the kind of questions you should be asking your broker. And truthfully, an IPO is not always the best option. It's not always the only option for every company. What the banks can also help you with are other transactions, corporate mergers, acquisitions, etc. But what you really want to get as much as you can is absolute honesty from the broker about your prospects, because the easiest thing in the world is for everybody to say nice things to you, but what you want is to ask the kind of questions that really put them on the spot and make them be a little bit concrete about what they think you can do. I mean, David?
Yeah, you don't always have to do an IPO at all. You may be, for example, a company with an interesting technology platform. You might be doing a great job privately. You might not require a big injection of capital to expand and execute on your plans. You could therefore approach a broker who may act for a similar listed company, or a company that could well use your technologies or your knowledge, and simply build a relationship. And from that perspective, the broker would come from the other side, so from the company that particular corporate acts for at the time. So that's just one way that you could remain private and yet transact with or do something with a broker.
Yeah. And Phil, are you brutally honest, or do you?
Try to be. And actually, it plays to the point I mentioned earlier about if I was a corporate, or if I was recommending a corporate when they're talking to a bank, is to have multiple endpoints and make sure that you've got buy-in from a corporate financier and a salesman and a research analyst, because I think you're less likely to get a sort of flattering answer from just one. If you've got a team of people, I think you're more likely to get ultimately an honest answer.
And that might encompass timing and amount you raise and
absolutely,
all those.
Valuation, timing, amount, whether it's even whether an IPO is the right thing, whether it's it should be a follow-on private round, whether there's VC money available, crossover round, whether it's M&A, licensing, or whether actually it's very nice to meet you, all the very best. Sometimes there might not be anything that comes out of that. Just answering those points there, I think it's difficult to have sort of black and white numbers as to minimum amounts, but undoubtedly there are levels at which fundraisings become easier, and certainly when you're looking at sort of institutional and specialist investors, whether it be private or public, and two, also I think from a company perspective, one has to be cognizant that brokers ultimately are there to make something out of it as well, and therefore when transactions get a bit more sizable, they tend to get a bit more interesting.
Yeah, and you also do have those huge fixed costs of your lawyers and accounting fees that tend to be pretty much the same regardless of how much you raise.
That's very
and
true.
they're really
easy to do. A big portion of a small raise, yeah, absolutely.
And the sort of broker that you approach will also be determined a little bit by where you see your valuation and how much money you're going to raise. So there's no point if you're trying to raise, let's say, 10 million sterling, going to JP Morgan and saying, can you do that for us? It won't work with their economics. So to some extent, you're self-selecting which bank by determining how much money you're intending to raise. The other aspect to it is also in terms of the amount you're raising relative to where you think your valuation will lie. So if you think you've got a huge valuation, but you only want to raise a small amount of money, you're not going to have enough liquidity in post-market presence. So you can do it, but it creates a whole list of problems in terms of the aftermarket, and that will cause investor concern. I don't really want to buy into a company that's only going to have a 5% or 10% free float. So
and a free float would be the point where your VC investors or your founders still own, say, 90%, and new investors own 10%. That would be the free float. And a lot of incoming investors don't like owning too much of that free float. They want to be able to, it's a quandary, because a lot of these investors actually want to invest enough that it's worth their while. There's no point to them thinking, well, just put 50,000 in here, because they're so busy, they're so big, it's not worth their attention to such a small investment. So they want to be able to invest enough that it's important to them, and the results of what you do will actually make a difference to their fund. But equally, they don't want to own a huge proportion of the company. So there is, raising a sizable amount is important. And then in terms of the market capitalization, the value of the company afterwards, Max, I mean, how do you see the difference between the smaller companies and the bigger companies faring?
Well, there seems to be a level of investor interest, depending on the nature of the business. So if you are a profitable business, then you will have a broader pool of investors who can invest in your company. If you are a loss-making company, then that narrows the pool. Similarly, in terms of market cap, if you are a company that has, let's say, a market cap over 100 million sterling, then there is a broader pool of investors that will participate in IPOs and show interest in that company. If it's below 100 million, you're going to have a narrower pool of investors.
Yeah. And I think other things to think about talking to banks around is sort of what other clients are they working with? Are they working with what you might see as competitor companies or companies of a similar size to you that you can see that they've done a good job with? And you should always be able to ask if you can take up references. I think that's an important thing to do. And the other thing is also not in some of these transactions, particularly as they get bigger, a bank doesn't work on its own. It'll work as part of a syndicate. So one or two or three banks will work together. So do you think companies should be asking who you work with happily and what other examples of deals that have been done?
I think sometimes that's fair enough. Yeah, I mean, there are, especially with the MiFID II world, there's now more and more joint brokerships because people pay to get research written on them and to access those different pools of investors. So I think different banks working together can and does work very well. There are times where it can be more of a hindrance because you can't always coordinate who you want to talk to, when and in what order. And there is a bit of a dark art to doing things in the right order and building momentum early on a roadshow and building the book the way you want it. But, I think that by and large, we all play pretty nicely together.
Yeah. Jolly good. And I think, Max touched on the subject, Phil, about, there's no point probably going to a JP Morgan if you're only trying to be a £30 million company, because they are just so busy, and you'll find that people get pulled off to look at the merger of SmithKline and somebody else rather than worrying about your deal. So, Phil, I mean, how can you assure a company that they will be important to you?
Yeah, no, I think that's critical actually, because it's very easy to get carried away by the letterhead and the logo. And I think what you need to do as a company speaking to advisors is to make sure that you are getting the team, and certainly the team that you meet, the pitch team, if you like, or the team that you're meeting. I think you need a good warm feeling actually, and some confidence that they're going to be the people who are actually there late at night doing the work when it gets too difficult, and they're the people who are holding your hand through what is probably a difficult and unusual process for many management teams. Certainly they haven't done it before. So I think making sure that you get the team that you think you're getting. You don't want the C team at the A bank if you're doing it all the big bank.
Exactly.
You're much better getting the A team at the bank that suits you and is in that right. There might be a bit of aspiration. You might want a bank that you may be one of the smaller clients of that bank. I'm not sure you want to be the smallest, or certainly not the smallest by a mile, because you're right. When push comes to shove and resources start getting allocated and squeezed, there is a risk that you'll get forgotten.
Yeah. Okay, Max. Now you have slightly been on both sides of this fence, I think. And if you were a company, what do you think you should? What information should you take to your board? I mean, how would you go back to your board to say this is the way forward?
Well, I think interestingly today you've got the sales represented with David, Phil's representing corporate finance, and you've got myself representing the analyst side, and those are three key cogs in a broker. So I think taking about all the other things that have been said, you want to make sure when you're assessing a broker that they have functioning, those three cogs function. Again, also, as David said, the ability to distribute, in other words, to raise money, is the de facto critical factor. So you want to balance those cogs within a broker when you're assessing it and taking that assessment back to the board. The other aspect, which I think is generally very helpful, is valuation for the business. You will obviously have a view internally of what the value of your business is. However, external validation of that through discussion with brokers is also a very valuable aspect. So I would definitely push, and you don't have to necessarily choose your banker based on that valuation. Sometimes that can be dangerous. Some banks love to give you really high valuations, and then when it comes down to the actual deal, they say, oh, well, actually, the feedback from the market is that valuation we told you isn't what you're going to achieve. It's considerably less, and you sort of have to go back to the board red-faced. So you have to be realistic about the valuation, but I would talk to more than one bank about a valuation so that you can put it into context. And therefore, when you're choosing, don't just choose the one who gives you the corporate finance gives you the biggest valuation. It's good to try and get that from the market context, the people more closely aligned to the market, which would generally be the sales interface there. So David's role, or perhaps the analyst as well.
Yeah, thank you. And I guess these days we're looking at who's investing and how practices are changing going forward. It is quite clear that the UK base of specialist life sciences funds has dwindled over the years. And does that mean that we need to be looking kind of beyond the UK, do you think, Phil, to...
Yeah, glad you asked me that, actually. Because actually, from my perspective, and not to pitch Bryan Garnier, but actually our MO is that it's about accessing capital. It's not about necessarily where you're physically based as a company or where you particularly want to list as a company. But I think more importantly is, if you're looking to access capital, then it's about accessing capital. And therefore, I think you need the ability to be able to tap as many geographical markets as possible. I don't think there isn't a sort of a perfect off-the-shelf solution. I think it depends on the company. I think it depends on the company's investors, management team, assets, the history of the company, the nature of the company, where it's come from. But yeah, I think the ability to access more than sort of one pool of investors, because inevitably you slightly limit yourself if you're just looking at one geography.
Yeah. And David, do you, as a specialist salesperson, do you focus on any one market, or do you just tend to focus on the kind of funds that are going to be investing in life sciences businesses?
It depends on the company, I think. So, companies of all different types. If you're a reasonably large, profitable company, then it's the large institutions that will be, and the generalists in London will be very keen to see you and to hear from you. If you're a small cash-burning company that's still very much in the development phase, then the types of investors you might want to look at are the VCT and EIS tax-driven investors, and AIM is a great place to do that. Equally, in terms of specialists, and the point you touched on there about there not being that many in London, that's absolutely true. But there are specialists in London. There are funds popping up as well that are specialists. There's several in Europe, and obviously there's the ones over in the US as well. Now, obviously there's limitations, and there can be limitations on allowing US investors to see certain things, but depending on the nuances of the deal. But they are there to be found, and that's another question you should certainly be asking a broker when you go around and to look at all the different pools of capital that they can access.
Yeah. And I guess we're all aware that sort of Neil Woodford's funds have kind of been the mainstay of the UK sector for a long time, but I think we've all got to get to the point where that's not what we rely on anymore. Do you think entities like Arix and the like are starting to play a bigger role? So these are kind of public companies that have raised money to invest in life sciences businesses, be it private or public. Do you see them? Are they big enough to play a big role? Are they taking more of a place in what you're doing, Max, do you think?
I think in terms of, investing in biotech, the more institutional investors there are, clearly the better it is for the industry. I think there is a increasing trend for companies to look to the US for investors, and given the ability to assess companies now has really moved dramatically to the US. I think over the last sort of probably 10 or 15 years, as the pool of investors in Europe has perhaps shrunk. So I'd say the US is a key aspect for companies' plans, and many companies are now looking to either go straight to the NASDAQ or potentially use a European market as a stepping stone to the NASDAQ.
So one of the questions that's just come in was, what do you have to do to access US or Asian money? I mean, we'll start perhaps on US, which I know a little bit about, and maybe someone else can pick up on Asian, because I know nothing about that. I think the US market, I mean, certainly from my experience, takes a long time to break through. You get there, the analysts are extraordinarily detailed. I mean, they know everything about every clinical trial that every company in the country is running, and they know they can compare extraordinary detail because they have a much bigger pool of companies to compare there. But you do have to visit a number of times. But and there is to go straight to NASDAQ. What I think has been clear over the last few years is that you need to have at least 50% or more of what they call the book covered before you go out. So if you're going out to raise 50 million, you need to pretty much be sure that you've got 25, 30 million plus covered. And so that means it's either your existing investors or there's this a thing called crossover investors. And David, could you explain that term, do you think?
Well, a crossover investor really is someone that would be willing to support at each stage of the investment life cycle, really. So private, that they may have invested at the last private round, and then they'll be more than willing to follow their money when you come to do an IPO. I mean, that's probably the broadest definition, but that's all there is to it, really.
Yeah, and these typically, I mean, there's some quite specialist funds, particularly in the US. Is that right, Max? I mean, so I think we're looking at specialist people who are prepared to really bridge through to a bigger public round, and rather than VCs that you would see supporting you at the early stages.
Yeah, so it would be typically an investor who invests in the public markets, but also has the capability of investing in a private company that has a view to going public. Yeah. So pretty much as David had said.
Phil, have you had any experience with Asia, particularly?
Not a lot, to be honest. Focus has principally been European and US. I think ultimately, and Asia is it's a big place.
Yeah. Yeah.
I think ultimately it's probably something that you have to go in via an expert. You have to go in with someone who's got the local knowledge. And you hear a lot about companies looking to tap Chinese money, for instance. I don't think that's straightforward at all. I think there are cultural, there are language, there are there's issues there that if you're going to do that, I think turning up with a UK broker is probably not going to get you very far. Yeah. I think you would need to have someone on board who was capable of actually delivering that, and that was their expertise. That said, there's an awful lot of money over there, and some of that money has come over in various forms, and there are sort of Asian money funds, for want of a better description, which do invest in European and Western. But I think that's more of a they are accessible to the European and US banks. But I think going to Asia, I think is probably outside of my field of expertise.
Yeah, and quite often there does tend to be a little bit of a catch that they show huge interest, but they do actually want you to put some kind of base of operation in their country. So Singapore for years has had some very good breaks, but when you actually come down through it and you realise you've got to move half your company there and the like, you have to think very hard about whether the tail's wagging the dog there, I think. And you hear the term sovereign wealth funds. Are they somebody that you come across, David, much?
Occasionally, I mean, not in any of the recent transactions really that we've done, but I know one of them back to Pamela Gordon, but you've got large family offices as well and things like that, and you'll often find that these pools of capital are quite big and quite opaque, do have some kind of London-based representative, or at least European-based representative, especially if they're playing on the equities markets over here.
Yeah, and family offices are where you get a very wealthy family who've built their wealth through some corporate business, and then they appoint a group of investors to manage their personal money, typically. And they're quite interesting because they tend to be bound by slightly different criteria than other funds, because they're only really answerable to one investor rather than having to perform and be seen to be performing against indexes and the like. Okay, we're just getting near the end, I think, now, but maybe just come back to that this dreaded MiFID II subject. So this is a European-wide directive that's come in that really is trying to make much more transparent various fees and operations that are going on within the financial markets. I think as we touched on it, it doesn't really impact before you IPO, because at that point any broker can talk to any fund manager. But in the past, there's been a lot of the fund managers have got research without realizing they're kind of paying for it. I mean, a lot of the time they have been paying for it, but it's not been obvious how it's being done. But going forward, I think, there's a recent survey that say that nearly 2/3 of fund managers see the overall impact to be negative. Thoughts, Phil?
That's probably true, actually. And in the sort of, I suppose, in the sort of within the sector, which, and most of the companies that we're probably talking about, even if it's hypothetically, are in that sort of smaller, possibly mid-cap space. I think it's been a challenge for as long as I can remember, that companies looking to get research coverage. How do you get research coverage? Who do you get to cover you? You know, your house broker, yes, and then who else after that? Which has probably helped some of the sort of Edisons and the equity. You know, there are a few houses there. Probably shouldn't be advertising for all the firms, but there is a sort of a little sub-industry there that's built up for that paid-for research, and you can see a lot of potential brokers moving towards that. But I think it's always been a challenge as to how do you get coverage of those small companies, and I think MiFID II clearly won't aid that, because it will restrict to some extent, less or greater, but it will restrict to some extent the level of coverage that the smaller companies get.
I think what's happening now is that the fund managers are actually, if they want the research, they have to pay for it, and they're seeing it come out of their own profits and then ultimately their own bonuses and pay packets. So people are thinking very hard about which brokers they're prepared to have a relationship with, how much research they need, and who they're prepared to transact with. And then when you're going into an IPO process, you might find that some banks just can't talk to some of the funds because they don't have an ongoing relationship. And I think it will make a difference. So interestingly, one of the things that this survey did say was that it says that your website is going to become a much more important source of information, because in the past, typically the easiest way to win people over and give them a good view of your company is to give them what's seen as independent research from brokers. I mean, would you echo that?
I'm not sure it would actually increase the use of the website, but I do think Phil's comment is right in that it will add to the idea of paid-for research. So the houses that or the firms that offer that will benefit from MiFID II. Mm-hmm. I'm not sure that will drive people to the website. So
no, it's.
I think my understanding as well is that it's also limiting the sort of corporate access element as well. So there are funds that won't, or increasingly won't take meetings on a sort of non-deal roadshow basis from brokers who are not the house broker. So I think there's an additional bit of limitation there, which probably places more pressure or focus or onus on companies themselves. That if your broker can't do X, Y, and Z for you, you're probably going to have to do it yourself because you're going to be a bit limited as to how else you can access the market.
And clearly,
so the IR firms are probably quite happy.
Yeah, so exactly. So what's happening now? The investor relation firms are actually now selling themselves as being the people who can take you round to see investors because they are kind of seen as independent, whereas historically you would typically have gone with a broker to see them. I think certainly in the US market, a specialist investor relations firm there is an important thing to have if you really want to, certainly at the outset, but thereafter, investor relations in the US is a full-time operation, and I think once you've had your first meetings, you might then think about having to get some specialist as an internal employee who spends their whole time just ringing funds, ringing, trying to sell the message and on from there. So I think we're near the end of our time. Is there anything any of you would feel any information, any tips we could be sharing with the audience at all? Max?
I just would reiterate the importance of getting to know your broker before you would embark on a potential fundraise. That means spending a lot of time with them ahead of making a decision about which broker you're using, and choose a broker that's appropriate for your size of company and your plans.
Yeah.
Don't necessarily go for the big lights because you think that will add kudos to your company. It's not necessarily going to help because you won't have their interest in helping you.
Thanks. And in terms of one of the questions we didn't touch on was how do you meet your brokers? I mean, you are out and about, you lot, aren't you? I mean, there are a lot of conferences like BIA conferences, and a number of the investor relations firms and similar will run conferences. Go along to there. Just don't be shy about going up to see people. And I think every one of the bank's websites are pretty good about putting these lovely pictures on the on there, and the names and the contact information.
And a broker will always be very happy to talk to you.
Yeah.
At least for the first meeting, anyway. So
Yeah.
And if they're not, then well.
Yeah, and you don't always have to buy them lunch, by the way.
Although it's recommended.
David?
Yeah, just echo what everyone else said. Don't be shy. Talk to people. At any stage, you don't have to have a transaction in mind. Just come and tell the story. Brokers are interested. We're always looking for new deals and new interesting companies to take around to see investors.
Great. Well, thank you all very much indeed for taking the time to do this. It's been really interesting, so thank you.
Pleasure.
Thank you, Christine, and thank you to our panel. That was a fascinating discussion. Before I say goodbye to everyone, we've got a few events coming up. If you're interested in today's discussion, you'll definitely be interested in our China event tomorrow about accessing finance over there, and our annual lecture with Sir David Cooksey, who is a long-time investor in our sector. And also, I'd like to bring your attention to the 23rd and 24th of May, where we have our CEO and Investor Forum. So thank you, everyone, for listening. This will be uploaded onto our YouTube channel shortly, so you can listen again. Thank you and have a good day.